Good morning. Hey, what's up? This is Brian Kuzmar from Commercial Rare Coins and Precious Metals in a blustery and somewhat rainy Lauderdale by the Sea. Hey, how was your weekend? I hope it was pretty good. And in case you missed it, I did a little special yesterday on, I call it the weekend wrap-up, as you can see here, silver and gold weekend wrap-up. I'm going to try it once or twice, see what happens. But more or less, if you can see here, what I've done is I'm kind of just gone to all the questions over the last week and or in the comment section, questions and comments. And what I've done is I've just gone and answered as many as I possibly can. I think that's kind of like a good educational format because there's some really good questions asked in the comment section and some good comments made as well. So I did that yesterday. If you didn't see it, it's on our YouTube page, and it's called the Silver and Gold Weekend Wrap-Up. Let me know what you think about it, and maybe if I have the time and it seems popular enough, I will go ahead and do that on weekends as well. Hey, let's take a look at what my headline was here. And gold to silver ratio shows epic move up. You notice I put a question mark on that. I just did that just because, really. Gold to silver ratios do show epic moves up, but the problem is you've got to read them after they've already happened. So, however, I want to take a look at some gold and silver charts here in a minute. And let's first move to a little bit of news. You know, I've kind of, as you know, I do like zero hedge, and one of the reasons I like zero hedge is because they provide different viewpoints, different narratives, and you get to pick and choose. Unlike corporate media, which gives you one narrative usually, two if you're lucky. They'll make fun of the second one mostly, but they give you one narrative they want you to think and believe, and that's what I don't like about corporate media, and that's one of the reasons I got rid of my Wall Street Journal subscription after 15 years. I mean, they present one point, one viewpoint generally, whether it was politics or whether it was the economy. Very seldom do they provide different viewpoints. They mostly provided the viewpoints that they want you to believe. And again, what I like about ZH is it gives you different viewpoints and different thoughts and different opinions by different writers, and they let you choose what opinions and what thoughts you want to believe, not what they choose. And I like that. I respect that. And you're not always going to get it right, folks, but it's better than having your narrative and your opinion picked for you, which happens to us from the time of birth until we die. I've tried to become a more independent thinker, and I hope you are as well. So let's take a look at ZH here after I gave you that long 10-minute dissertation on why I like ZH. And I don't get paid for it either, darn it. And I don't even get a free subscription. I pay the extra $1 a day so I can avoid their annoying ads. And by the way, you can read ZH for free. I'd say put it on your daily reading list. The free version is got all the ads in it and everything. I don't pay for I pay $1 not to look at the annoying ads. However, you can read it for free. You can't do that with Wall Street Journal more than once or twice a week or something like that. ZH allows you to read all their different stuff for free. And again, it's not written by ZH. You're going to get people to say, "Don't read ZH," or conspiracy. No, they provide different viewpoints, and some of them may be conspiratorial type viewpoints, but no less. They don't provide you with the one corporate narrative. And again, I like that. It's going to disrupt the F out of big tech. Crypto roars back as city sees imminent tipping point in global trade. I will skip. I'm tired of talking about cryptos. We're in the infancy of cryptos, and now the fact that these big, giant corporations and big whales are involved with it, you can kiss that fun little Wild West scenario that small crypto guys once enjoyed goodbye. It's gone. It's over with. These guys are going to hammer. You think the gold and silver markets get hammered? You wait until you see what they do to the crypto markets here. And by God, as a little guy, you probably don't want to be involved with that. And the beauty of crypto is that they can subdivide it, they can fractionalize it, they can create more cryptos, and they're eventually going to. But God, I said I wasn't going to talk to crypto, and I'm going to stop right now. So let's move along from there. Former French president sent to prison. I think there's a lot of presidents across the world that should be in prison, quite frankly. Past and present, I'm sure. China sends ominous signal, blah, 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 credit. This is kind of interesting. China sends ominous signal, manufacturing PMI slide to 9-month lows as credit impulse fizzles. One of the things we haven't seen, we haven't heard about the Chinese buying as much gold as they have in the past. What's going on with that? What's going on with central banks, the Chinese central banks and the Russian central banks, other big banks? Are they still in buying mode? That's something we need to take a look at. Maybe this week we'll kind of delve into that if I remember to do it. Biden backs Amazon workers to unionize. And, you know, you can have your opinion on that. We won't even discuss that. Stocks, futures, commodities surge as bond yields stabilize, and I think that's kind of why we're seeing gold prices and silver prices. Silver didn't get whacked that bad at all things considered. Gold is the one that really got whacked, and again, we'll get to that in a little bit as we're going to discuss the gold to silver ratio. As I said, not a lot of news in gold or silver prices here. Obviously, chaos in steel market as manufacturers battered by shortages and soaring prices. Interesting. They have shortages in the steel market and the prices soar. We have shortages in the gold and silver market and the prices go down. What the F does that mean? Doesn't make sense. Yeah, I mean, really, think about that, right? EU in disarray over Russia. Private jet deliveries plunged 20% during the pandemic. Again, just blah, 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 nothing much there. I'm going to go over to gata.org. If you notice, I've been reading it a lot more, and I tell you, it should be on your bookmark up the top of your page of sites you should look at least once a week. What happened to gold? Interesting little article. Guy Michael Batnick of Ritholtz Wealth Management talked about, from the Irrelevant Investor, that's the name of his newsletter, elaborating on the weird price of gold lately. It hasn't done what he expected to do. If he's talking about a falling dollar, rising inflation expectations, money printing, central bank balance sheets expanding, fiscal deficits increasing, and political turmoil should have risen. He's thinking that it should have risen the price of gold dramatically. Kind of what he's forgetting is that gold is already telegraphed. The prices is already telegraphed. It's already high before it even gets to that point. Gold made some really big moves, man. Last year we broke an all-time record. We went past our 1900, went into 2000. So this pullback is kind of healthy. Although I have to believe that this pullback has also involved a lot of monkey hammering. Remember, crypto guys, this is what I'm talking about. Monkey hammering by institutional buyers, and maybe even within the case of gold and silver, governments may be involved with pushing the price down. And that's something that Ted Butler talks about. And if you read more about Gold Antitrust Action Committee, if you read some of their articles, they talk about how governments are likely involved in keeping the price of gold down. And why would they want to keep the price of gold down? Well, because it has to do with, if the gold prices start to rise dramatically, it is a direct kind of a bell. It's like a bell that's being told that says, hey, inflation's getting out of control. And they know this. They know when people start flocking into gold. Governments know this. The central banks know this. I mean, government people that do the economics in governments and central banks know this. That when people start flocking into gold and the gold price starts rising like it did last year, that's a bad sign for fiat currencies, a bad sign for economies. So what do? They go in there and they step it down somewhat. So that's what we've got going on right now. We've got, I think that the prices are being pushed down by governments and large institutional short sellers with the help of governments. But anyways, let's kind of move along to the article here. All these things were in place over the last few months, and yet gold has done the opposite of what you expect it to do. It's down 9% over the last 6 months. Well, of course, it made its big move, huge move last year during the virus, and when we were starting to learn that we were going to, listen, inflation, these things that he's talking about, rising inflation expectations, money printing, central bank balance, fiscal deficits, and political turmoil. Gold and silver knew about these things, including this thing that he was concerned about, a falling dollar, years ago. Maybe you stock guys, the stock and the equity guys and bond guys and crypto guys are just starting to discover it, but anybody that's buying gold and silver physical for some time, this has already been happening. We've already realized it's happening, so this is nothing new to us. So I'm kind of thinking that the author that wrote this is looking at this and going, oh, wow, look at the inflation now. I don't think he's paid attention prior to this because that's when gold rate made its real move above 2,000. Now we're just kind of sitting sideways and seeing what the next black swans will be. And it'll be any one of these, except it'll be to a higher degree for sure. Anyway, decent article, kind of interesting article, but as the person that wrote this little blurb here about the article. Unfortunately, Batnick quickly curtails any curiosity, which he didn't. If you read the article, he doesn't ask, well, why is this, like I just questioned, and maybe that it's already been in the cards, and that's why gold made its big moves last year and sitting sideways. He questions none of that. And in fact, he kind of, in his article, he kind of acts like this is all new to him. And if this is all new to him, of course he's going to wonder why gold didn't make the big move. But we know this stuff has been happening for quite some time, so it's not a big deal. Batnick's lack of curiosity may not be surprising in light of his employment at Ritholtz Wealth Management. The firm's chairman and chief investment officer, Barry Ritholtz, who is a columnist for Bloomberg Nerds, long has derided complaints of government-instigated manipulation of the gold market. Ha! I didn't even read this part. Go figure, right? So this guy also that wrote that article has no clue that governments and institutions actually can bat these prices down or keep them subdued until they can't, like which is about to happen to them right now, especially with silver. If you look at silver, they've been trying to bash the hell out of silver some time, but it hasn't moved down. I think shorts are going to lose a ton of money in silver. Well, let's move on to what I was talking about earlier. Gold to silver ratio shows epic move up. Kind of an interesting chart here. I got two charts going on here. Gold prices versus silver prices, historical chart. This is by Macro Trends. Thank you, Macro Trends. Great charts. Gold prices versus silver price, historical charts. This also shows recessions. I like this. Look, if I blank this out, you see that, all the shaded areas? Now, if I blank this in, or I put the check mark on there, it shows all the little recessions throughout the history since, it says a 100-year chart, but 1915 to date. Now, let's take a look at gold prices here on the historical level. And here, you're going to have a moment of silence. I'm going to take a quick sip of coffee. I'm getting a little dry here. Good stuff. Couldn't live without it. Sorry. Let's take a look since 1915. And let's think about during the dates here that we're going to cross things that have happened. All right, gold in 1915. This is right prior to World War I. But interestingly enough, I'm going to blow that up a little bit. Look, ready? World War I. Right there, 1919. And let's see what happened. Silver went from 50 cents. It doubled in price in that few years. Now remember, gold and silver were money back then. We used it as money. So the fact that it doubled even during this period is kind of interesting. And gold went to about $20.63 an ounce at the time. Not a big move up during that time, but silver for sure. Take a look at silver. And that probably has to do with the industrial uses, potentially, maybe, or the uses of silver and money more. I'm not quite sure. We'd have to read into that. But if you notice, gold kind of flatline, stays at $19, $20 an ounce. For how long? Oh, here's a depression right here. Let's see what happens during this period. Not much. 28, 29. What is that? Hang on a second. Price of gold. Silver, 53 cents. Gold, $20.69. $22.59. Well, here's post-depression. And you can see the prices of precious metals rise somewhat. But why don't you see gold rise up that much? Because we were on the gold standard at the time, and gold was kind of at fixed prices. I think this right here, 1930s, 35, you'll see the gold price and silver price kind of stay the same. Again, remember, gold was a fixed price for a long time. We had, our dollar and coins, or money was backed by gold and silver. So here's that stretch right here, where we were backed by gold and silver with our currency to some degree, until 1913 when the Federal Reserve was created. But our money was still backed by gold and silver up to this point. Look, this is, we were in the Bretton Woods Agreement. We had agreed with the world right about this point that we would be the world's dollar. The whole world could trade on the U.S. dollar. And that lasted for quite some time, 59, 60. Then Vietnam came along, and the French actually were the ones that came along. They said to Nixon, hey, listen, you guys are spending a ton of money. I mean, what's going on? Look, silver price too during the Vietnam conflict. Isn't that funny too? World War I, silver kind of went up. World War II, silver kind of went up as well. I don't know if there's any correlation there. The only correlation I can see is the actual dates. However, it seems like war is good for silver. Not quite sure. But we're looking at gold, which is the blue line down here. We were still on the gold standard at the time from the Bretton Woods Agreement, which was what, 52 or something, all the way up to the 60s. And here's where France said, hey man, you guys are spending too much money. You're supposed to be the global dollar. You know, the Bretton Woods Agreement, you said you'd be responsible in spending. However, you're overspending with this Vietnam War. And remember, the French were a little pissed because they were there for quite some time themselves, and then we stepped into the situation. So maybe they were a little snooty about it, but they were right. We were spending tons of money on Vietnam and the war. They started pulling large amounts of gold out of the United States. You know what I mean? They said, "Hey, man, we want our gold back. We don't think you're spending properly. Here's some dollars. Give us gold back." Nixon thought that might freaking deplete the U.S. of all our gold, so he basically closed the gold window right during this time. You can see, watch, ready to see gold right there, $40, 67, 68. He closed the gold window in, what was it? Look at the price of gold in 1970, 71, I think it was, when he closed the gold window. And consequently, look, when Nixon took us off the gold standard, look what happened. Look what happened to the price of gold and silver. That's very an important time in history. Again, Nixon took us off the gold standard in 1971 and 72, and our currency was no longer backed by gold or silver at all. And again, look at that flat line with gold and silver. And look what happened. Boom, 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 boom. These are where we start to see these boom and bust periods. Here's our first one with precious metals, gold and silver, and you see they're acting in unison right here. We got our gold market was 550. I think it doesn't show on the chart here, and maybe it shows inflation adjusted dollars. That's probably what it's doing here. But gold hit a high of 900, and silver hit a high of $50 an ounce when you see the spike right here. This is $1980. And then you go along here and you'll see that we had a little drop here and then another little spike and kind of sideways action for a lot of years in that 300 to 400 range. But look at the recessions here too. You see the shaded areas? These are recessions that, again, I can turn that on and off. Show recessions, turn on recessions. I wish it was like that in real life. We could turn off recessions in bad times. But look, here's 2008, the financial collapse. Look what happened to the price of precious metals during this time. Here's the beginning of the financial collapse right here, right? Of a major recession. The recession prior to that was what, 2001. That's when a little mini recession. See that sparks off this right here, and then we have a major recession here again. And look what we've got here. We've got another little mini recession, or I guess we can't even say that chart's completed. And we've got the same thing. We've got gold and silver prices rising again. Think about these patterns. Think about what's happened during these patterns. And interestingly enough, look at these. There's a little mini recession right there. Look at the recession right there. 81, 82, and probably up to 83 or close to it. And again, same thing here. Little mini recession 2001, which sees the start of precious metals to climb to that last bull market we had in precious metals, and a major recession right there. I think we may be seeing the same thing here, that little blip, but maybe this is a major recession we're into right now, or we're going to continue to see. That's why that chart is not acting like it should at the moment. We're just beginning to see it. So that's my opinion. But interestingly enough, we said we're going to talk about gold and silver ratio. Let's take a look at the ratio chart here and take a look at the same thing here. I'm going to look at the times here. 1915, gold and silver ratio was 37 to 1 at the start of this chart. But look at this. During the height of the war, World War I. Remember, I was talking about the height of World War I, but during World War I, 1919. Look at the gold and silver ratio then. Remember, we were pointing this out back here at this chart. Strange correlations here, which I really haven't made, but look, 1919. Look, silver doubles in value. Gold stays about the same because remember, again, a $20 bill was backed with $20 worth of gold. Remember $20 gold pieces? So we were on a gold standard, and that's why you don't see gold moving much. But look at 1919 during the war, and look at the gold and silver ratio here too as well. Silver had gone up dramatically, I guess, and had tightened up that ratio because of a war. Interesting correlation there. I don't think I noticed that before. And let's move back into, here we're getting into the Depression era, and you're going to see the gold and silver ratio again goes back to that high 75 to 1. Take a look at that. That's kind of strange. It looks like silver was more of an industrial metal at this time and was probably used during the wartime effort. And then during the Depression, we really don't have a war going on, and you don't have a lot of industrial uses for silver, so that silver to gold ratio is much tighter. And actually, if you look at it, from 1931 until, what was it, about wartime, during the war. Our gold and silver ratio was basically not too far off from here. Take a look at that. It's kind of strange. And again, I bet you this chart's been adjusted too. Another thing cool with this chart, look, shows recessions as well. By the way, take a look at this. Macro Trends does this. It's pretty damn cool charts they have. Gold to silver ratio, 100-year historic chart, and the same thing with the price chart there I just showed you before. But look at this period right here, August 30 to, let's say, 1945, where the war is. Let me go back and look at the price chart. The 30th. See, not much happened here. But again, we were on the gold and silver standard. Our money was backed by gold and silver. This is why you see that flat line on prices with gold and silver. However, silver did get costly during the wartime, it looks like, and then during non-war times, it just kind of followed closely to the price of gold. So maybe we're seeing a similar thing right now with the price of silver and the potential of manufacturing and battery technologies and solar technologies. That possibly could be playing a big role into it. Maybe the potential for war could drive up the price of silver as well. Hey, and we are, Democrat Party has been known for wars. I'm not saying that they are warmongers, but we've been in more wars under Democratic administrations than we have Republicans. So maybe we're headed for a war too, drive the price of silver up. I hope not. I hate to see anybody die, no matter what it's for. But let's take a look at this ratio here. And as you see, during the wartime, the ratio again falls down here. Well, what's significant about this date in 1968? This is Vietnam again. Take a look at this. Remember, wartime, World War I, Vietnam, and obviously, I don't think World War II had a big effect on, well, it did actually lower the gold to silver ratio right here, if you take a look. So during peacetime, it looks like the gold to silver ratio was pretty maintained about the same. But again, remember, we were on a gold and silver standard, and I keep repeating myself. But everything changes right here. Right after we get into Vietnam War, the gold and silver ratio is, again, 22 to 1. Look at that, wartime. That's an odd thing. Maybe it has something to do, again, with the industry during war. But here, Nixon is going to take us off the gold standard as I move. There we go. Nixon's taking off the gold standard. Look at the gold and silver ratio. Oddly enough, it gets higher, which doesn't make sense to me. But let's look at some other lines in here. Let's take a look at these recession lines. You got a height of the gold market during this recession. You got a height of the gold market during this recession. Take a look at this recession right here, this mini one during 2001, when gold and silver markets took off again. Look at that, gold to silver ratio. So these charts are very telling. And here's where we are right now. We're down to 80 to 1, but at one point, man, we were at over 100 to 1 on the gold to silver ratio. You can have a lot of fun with these two charts. By the way, if you get a chance, take these two charts and compare them, and you'll see, if you do the timelines and you remember dates in history, you'll find that during the height of gold and silver prices and the lows of gold and silver prices, and the same thing with the gold to silver ratio charts, that this tells us a lot about the past. It's pretty cool, and I think it tells us where we're going, and hence my reason for saying gold to silver ratio shows epic move up. I think so, folks. I think we're looking at a big recession going on here, another one of these gray lines. And again, if you look at the correlation between these recessions, except for this one in 80 and 81, we had a recession shortly after the collapse of the gold and silver markets as well. Well, explain that one. Anyway, so much to learn here, so much cool stuff. I'm going to start kind of read these charts and try to compare them more often. I hope you enjoyed it. And again, I encourage you to go to Macro Trends, pull up their gold to silver ratio 100-year historical chart. You can play around with it. It's pretty cool. A gold price historical chart 2 by Macro Trends. Thank you, Macro Trends. Very cool information. And hey, if you got any comments about what I just showed you and you figured something out, you took a look at something or showed some something that compared and made sense, say something in the comment section. I'll certainly get to it maybe this week or on the weekend, a wrap-up that I do. Let's get to gold and silver prices right now, because again, I've done another long report. I do apologize, and I'm going to update this. I didn't update this for about 20 minutes to see if it's up or down. What do you think? 1738 here, 2690. This is a static page. You think it's going to be up or down? I think it's going to be up, because the trend has been up this morning. Let's see if it makes a fool out of me. And yes, it's up even a tiny bit more, except silver, I think, went down a penny. So let's see what the range was here so far since Friday. The low on Friday was 1721. Market's got monkey hammered, man. there's a shortage of real gold and silver out there, just like there's a shortage of steel. But steel prices go up, unlike gold and silver prices. Gold and silver prices are you can't tell me they're not monkey hammered. There's not something going on. When steel is hard to find, the price of steel goes way up, as we saw in that article back here, a Zero Hedge article. Where is it? Oh my gosh, I missed it. Okay. But anyway, it says chaos in steel market is manufacturers battered by shortages and soaring prices. Well, gold and silver buyers are being battered by shortages, but we are not being battered with soaring prices. What the F is going on there? Again, I say it once again, it makes no sense. It just tells me that markets are being manipulated and monkey hammered. And again, don't get discouraged. All markets are monkey hammered and manipulated, especially if you've got corporations, big corporations, and government involved with it. That is for sure. That's why I've been warning you crypto guys about it. You know, that wild, wild west and the fun days of the wild, wild west and these nice little increases and playing around cryptos are over. You're there to be eaten now by the big whales. Us gold and silver people understand this, but we know how the game is rigged. Once you figure out how the crypto game is rigged, or once you figure out, like we have, how the gold and silver game is rigged, you can play and win, and that's what we're doing. We are winning, folks. Buy the friggin' dips. Buy physical, buy the friggin' dips. Avoid paper like the plague. And get the word out there. Tell people to avoid buying these bullshit fake paper instruments that claim they're a piece of gold or a piece of silver. They are not. And all they do is hurt your real gold and silver market. Well, sorry about that. I digressed again. Let's take a look at the spot prices. Up a little bit today. Interesting, gold got hammered, monkey hammered, really bad. But gold is the metal of kings. Gold is also the metal of which they measure inflation on. So when gold prices start to get too high, trust me, they will batter it down because they can't have people flooding into gold and silver prices, or gold, because it's a bad sign for them. It just looks bad. So I do believe these markets are artificially hammered down for a couple reasons, to prevent you from seeing inflation the way it really is, and also right now I believe also to help cover the shorts, the bullion banks, and the institutions that are short major amount of metal in silver and gold. I believe that the markets are being monkey hammered for their benefit as well. But the good thing is, if you can find the product, it provides you a good opportunity to buy the dips, as I've been saying over and over and over. Again, sorry sounding like a broken record, but it's true. Silver, beauty of silver, man. Silver's held its own. It went up 40% last year. And now, hey, it was over $30 for a little bit temporarily, especially with that rumor that went around. It jumped up $30 and then it came down again. But silver's been holding this $27, $26 plus range. Very impressive. And I think that there are some big shorts out there, commercial shorts out there, and banks and institutions that are short silver that are trying to recoup their silver, and buy silver and cover their short positions. But I think because of this, people buying silver and the lack of real silver product out there and the big demand for real silver product, real bars, that they are having a hard time driving the silver price down much lower than that, which means that they're going to have to fill these short positions at much higher prices. It's going to cost them a lot of money. I don't think it's so much with gold, otherwise we'd see gold holding its own too as well. But again, that's just my opinion. It looks like platinum made that run above 1200 again. Last week's little douching of the metals markets, manipulation or monkey hammer, whatever you want to call it, I think just provided us a good opportunity to buy the dips again. As I always say, buy the dips and relax. Don't worry about these downs. It's only temporary. You saw the charts as well as I do. Go study them. Oh, what's the best product out there? Sorry, I didn't mean to take a big breath and yell in your ear, but man, these things are unscripted. I don't get a chance to stop the show and start the show. I just got to rant on. And again, if I sound like I'm ranting, I do apologize. Best products out there right now that I have availability to, way better than Gold Eagles, which are trading, looks like, from $170 to $200 over the price of gold by the big online sellers, which I can always beat their prices, and I say that all the time, but it's true. So it looks like they're anywhere from $160 to $200 for gold buffaloes and gold eagles. Better deal even out there, which I can get right now, is Valcombi Swiss bars. Valcombi Swiss bars, assay, a great product, and I can get them to you for less than $100 over spot per ounce. Actually, less than 90, I think it is, and cheaper than, again, all the other guys out there that are advertising to sell them. The only problem is I only sell local, folks. I don't do online sales, and I don't do phone sales, and I don't ship anything. You have to buy from me face to face, and we only do cash and carry up to 10 grand. Over 10 grand, we do checks. Oh boy, let's see what we got for silver. Best deal out there for silver. I got a really good source for 100-ounce Valcombi Swiss products, whether it's silver or gold. So I can get a good deal on some 100-ounce silver bars right now. Again, prices per ounce way cheaper than Apmex, way cheaper than JM Bullion, way cheaper than SD Bullion. I can beat their prices for sure per ounce on gold and silver products. So, come by and see me if you're local. If you're not local, I always say, try to buy local. If you don't live near me, and and I'm not your local coin dealer, I wish I was, but not everybody can live in a beautiful Lauderdale by the Sea. Try to find someone local. Even if it takes an hour drive, it's worth it. I like the idea of keeping your money local when you're buying anything. I don't care if it's jewelry, tires, food, whatever it may be. Buy local, even if you have to pay a little bit more. It keeps the money in town. Spend it here, keep it here. One of the biggest problems we're having with this virus thing is the destruction of small businesses, and destruction of small business destroys towns and cities and small communities. So I encourage you, whether it's gold, silver, whatever it is, buy local, folks. Very, very important, even if you have to pay a little bit more. But here's another thing, too, is go to your local coin dealer, precious metals dealer, whoever sells you gold and silver, and say, hey, listen, can you guys beat the big online sellers' prices? Maybe even by a little bit. I'd rather buy from you guys and keep the money local. And chances are, like me, they will. So it never hurts to try and go ask. Again, if you have nobody local and it takes you 3 or 4 hours to drive to find someone local, you can buy from the big online sellers. Those 3 that I talked about earlier would be the more reputable ones, in my opinion. I haven't seen anything wrong with them, other than the fact that I can beat their price. I'm shamelessly plugging myself. Hey, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. Buy the friggin' dips out there when you see them, and don't panic. And when you see a big dip, don't say, oh my God, gold's crashing. It's not going to go bankrupt, folks. The nice thing about gold and silver is you're never going to wake up in the morning here it went bankrupt, like you could with your pension account, like you could with your IRA, or anything else, your cryptos. You could wake up and hear they're gone, they're bankrupt, they're done. If you have gold and silver in your hand, you are never going to wake up and hear that. So relax. Well, that's about it. Got any questions? Call me at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Mondays through Fridays. Happy to help you out with making you a smarter buyer and telling you what the best deal of the day is. Hey, thanks for watching. Anything crazy happens today, I'll come back and do another video. If not, I will talk to you tomorrow. Have yourself a wonderful day. And again, thanks for watching, and please subscribe and hit the like button if you haven't already. Bye now.